People get very sensitive about the delivery of our technology, infrastructure, software, and components since it has a direct impact on their competitiveness and earnings. It is likely that our clientele nowadays is more sentimental, and with good reason. The emotion would subside if we could meet everyone's requirements, but it's really stressful and intense. We are attempting to do our best, but we have a great deal of responsibility. Nvidia's stock has remained stable in spite of a wider market sell-off. This hour, CEO Jensen Huang will be speaking, and Seema Modi will be providing us with some news. SEMA. David, Nvidia CEO Jensen Huang argues in favor of accelerated computing and highlights the significant contribution Nvidia is making to the quicker modeling of data centers. He's also defending the cost of the servers that the business sells. Despite the fact that one Nvidia server rack may cost several $1 million, thousands of nodes are replaced by it. The astounding thing is that replacing every one of those and consolidating them into a single rack would only cost the cables connecting the outdated general-purpose computer systems. At the Communicopia conference, hosted by Goldman Sachs, the remarks were made. The talk is being moderated by David Solomon, CEO of Goldman Sachs, and he raised an important point regarding AI's return on investment. Huang claims that businesses are seeing increases in productivity and cost savings as a result. Businesses are cutting processing times by roughly 20 times by utilizing Nvidia's GPUs, and demand is still in its initial stages. They receive almost $5 worth of rentals for every $1 they spend with us. Additionally, he claimed that the process of training and then using AI models or inference actually uses less energy, which will help the business. The stock is currently up, although it is still below the day's highs. Now, David, is there still space for the shares to grow? This morning, let's talk about what the street is saying, what Oracle stated earlier this week, and some of the semiconductor market action that has occurred today. Let's get to Seema Modi. SEMA. Yes, Carl. Yesterday's remarks by Jensen Huang increased Nvidia's market capitalization by more than $200 billion. Given that this is the company's fourth largest one-day rise in history, the street is probably going to respond this morning. Bernstein rates Nvidia as a high choice, stating that margin concerns are exaggerated and that the Blackwell delays appear to be essentially a nothing burger. Their desired price per share is $155. The equities strategy team at Morgan Stanley has added Nvidia to its list of stocks to hold for the upcoming year based on both fundamental and quantitative analysis. They say you can't hold Nvidia if you want to be exposed to AI. They believe that Blackwell's availability later in the year will strengthen its standing as a contender. Whether yesterday's move was a sign of a durable rally is the main question that investors are currently attempting to answer. Mizuho is more circumspect. Their writing from yesterday's tech flow was good, but they didn't point to a surge in actively purchasing or a rush to acquire long semiconductor names. In fact, they claimed that a brief squeeze has certain traits. The price of Nvidia's stock has increased by 2%. Guys, I'm currently at 106 to 105 on Nvidia. I see a great deal of backing there. We started the day at 4.5% of Nvidia, which is unusual for me, and we're actually underweight Nvidia. It's like 5.5 to 6% of the S&P. What? I increased Nvidia to roughly 5.5% of the total weight by doing this. The report was excellent, and I don't think there is anything more I can say than what we have already discussed. At this point, though, I feel like we are merely going through the motions. I believe we'll be above 130 once more in a few months, possibly even before the year is out. The report was excellent because, well, it had to be excellent. Was it sufficient in light of the stock's price movement, how much it had increased, and the multiple? How would you respond to that? In any case, I spoke with Dan Ives immediately following the earnings release, and he brought to my attention something that, while perhaps common knowledge, is sometimes overlooked when we just receive a quarter's worth of financial results. If you predict Nvidia will do 79 cents in the upcoming quarter, but they will only do 76, you are not positive on the company at this time. If you're positive about Nvidia at this point, it's likely because you can see a scenario in which their $120 billion in revenue increases to $200 billion. giving them $5 per share in earnings power. It's far too cheap for that reality at $106 per share. In a year or two, or even a year from now, if you don't think that's the case, then ok. However, the reason you are in the stock is if you do. I don't need to say much more because I have a great position at Nvidia. But I enjoy how the price of the company is moving heading into its earnings at the end of the month because there is a lot of uncertainty. Although there has been some technical harm, I have a good feeling that Jensen will deliver. All three of them, Mark Zuckerberg, Satya Nadella, and Sundar Pichai, have stated that they will be purchasing all of Elon Musk's chips. In my opinion, it will be an amazing figure. Since we are about to enter a positive quarter for the market seasonally at the end of the month, I believe that's a pretty smart addition at these prices. I believe that Nvidia will have strong results at 109. Nvidia took a sabbatical in the latter part of last year. This is more serious. There are a few major concerns and other things. The main issue with Nvidia, though, is that they're going through a product transition. In addition, other semiconductor companies are also dealing with the concerns of a possible recession and other issues. One of the major surprises from Nvidia's most recent call was the company's decision to reduce gross margins in the near future. When semiconductor stocks dip, they typically undergo a brief period of underperformance before rising once more. However, I believe they'll emerge from that in a few quarters, and it will be a major talking point when he talks later today. We saw Nvidia sort of dismiss everything that wasn't AI-related, like the Fed, worries about global economic growth, or developments in other semiconductors. Are you suggesting that it may be considering the prospect of a global slowdown right now? I believe they are dealing with a lot of immunological issues. I believe that in the latter part of the year, semiconductors in general may experience yet another major panic. However, I believe that there are several secular tailwinds in the field of artificial intelligence that will ultimately prove to be quite beneficial. In my opinion, Nvidia is somewhat protected from these large fluctuations in markets like as PCs, commodity servers, and other domains. Thus, I believe they're succeeding. One problem is that they're taking up a lot of space, and people need to invest money on AI, which could have an effect on other industries. That was more of a story in the first half, and I believe it will be even more so in the following year. Although I wish there was more macro data, I believe Nvidia is well insulated and dominating the industry in terms of mind share. When we hear Nvidia's margins during this sell-off, we simply say, "Oh yeah, that's pretty good," whatever those margins may be. However, a business that scale is unsustainable. Margin cannot be unchanged indefinitely. What would be acceptable, then, if margins continue to decline? They're investing even more money in the pursuit of creating the next generation of chips, which is concerning since margins will eventually decline to this point, but their wealth will endure. The truth is that Nvidia is assembling these chips from tens of thousands of tiny components, and the process is extremely intricate. Given the complexity of their offering, they are deserving of a high ASP. Additionally, as time goes on, they'll add more highly profitable software and services. Certain businesses, such as Apple and others, enter markets where they may access more components of an ecosystem through their firm. We currently have a transient production problem with Blackwell that affects gross profits. However, I believe they'll expand into other markets like cloud and software, which will keep margins rather high. Yes, the 78% gross margin was exceptional. It wouldn't last indefinitely. Over time, they advise bringing it down to 75%, and in the upcoming quarters, it will be slightly lower. Then, in my opinion, it may return with a stronger combination and improved production. But you must pay attention to that. It's a very good point, Joe. Their inability to keep up with OPEX expenses and their exceptional margins, better than those of elite software companies at the moment, are contributing factors to the remarkable acceleration of revenue. You must so keep a close eye on it, although I believe it will experience a slight near-term hit before going out of power. Please let me know if you require any other changes.